Remote entrepreneurs operating out of jurisdictions like California or New York face an immediate built-in penalty on their revenue. Before any business expenses are calculated, state-level taxes quietly siphon away a double-digit percentage of every dollar earned. Capital that should be reinvested into vital software, marketing, or hiring is instead drained away into state coffers. Alaska offers a structural alternative. It is one of the only jurisdictions in the United States with zero state personal income tax and zero statewide general sales tax. Compare a founder facing a 13.3% top marginal rate elsewhere against an identical business operating under Alaska's tax code. The Alaska entity retains 100% of its pass-through income at the state level. Beyond tax retention, Alaska's Division of Corporations allows founders to utilize charging order protections. Under these statutes, if the business owner is sued personally, a creditor is restricted to charging the owner's share of distributions, rather than seizing the company's internal assets or forcing a liquidation of the business itself. We are going to build a legal corporate fortress. Step by step, we will structure an Alaska business entity designed to completely bypass state-level personal taxes while maintaining strict operational privacy. Selecting your business jurisdiction is more than a legal filing. It is the foundational variable in the math of wealth retention. Every dollar not lost to state-level taxation is a dollar that remains compounding inside the business. To harness this tax shield, you must select the correct corporate entity. Choosing the wrong structure in Alaska will actively trigger the exact taxes you are trying to avoid. The standard Alaska Limited Liability Company is a pass-through entity. Business profits flow directly to the founder's personal tax return. Because Alaska has no personal income tax, the state tax rate on that income is absolute zero. A C-Corporation, by contrast, is a distinct taxable entity. It is typically only necessary if you plan to issue multiple classes of stock or take on institutional venture capital.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact state steps and paperwork, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch as a sole proprietor or cut corners on their initial state filings. And that is exactly why they face massive personal liabilities or get their applications rejected by the Secretary of State. Your business must be a legitimate, separate legal entity. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire LLC or corporation setup for just $0 plus state fees. They take care of all the heavy legal lifting for you, filing your official articles of organization, providing your legally required registered agent service, and setting up your ongoing compliance alerts, so you never miss a state deadline. This step is non-negotiable if you want to operate legally and protect your wealth. I've linked my full in-depth review of Busy in the description, so you can see exactly why they are my top recommendation. Make sure to use my link down below to register your business through Busy today, which will also unlock exclusive discounts and perks. Get your legal foundation handled first. And then, let's get into the step.
This matrix compares the three primary structures. Look at the middle column. If you structure as a C-Corp, Alaska levies a graduated corporate net income tax that reaches 9.4% on income over $222,000. That income is then taxed again at the federal level when distributed as dividends. The S-Corp is a federal tax election for your LLC. It maintains the pass-through status for state taxes, but allows you to split your income into a W-2 salary and shareholder distributions, bypassing the 15.3% federal self-employment tax on those distributions. Alaska automatically recognizes this federal S-Corp election without requiring a separate state-level filing, keeping your state income tax liability at zero. A pass-through structure, either a standard LLC or an S-Corp, is the mandatory maneuver here. It bypasses the state's steep corporate tax brackets entirely while securing the 0% personal rate. Registering a business creates a public record. If you use your home address on the formation documents, that information is immediately harvested by data scrapers, exposing you to predatory mail and privacy risks. Alaska law enforces a strict geographic rule. Every entity must maintain a registered agent with a physical street address inside the state. A standard post office box will be rejected by the Division of Corporations. You solve this by hiring a commercial registered agent. They provide a physical Alaska address and act as your legal and operational privacy buffer. This commercial service physically intercepts public scrutiny and unwanted solicitations long before they can ever reach your actual geographic location. The commercial agent's address is listed on all public databases, scrubbing your personal home address from the state's search portal. Beyond privacy, this agent fulfills a strict compliance role. They are legally authorized to receive service of process, tax notices, and official state communications on behalf of your company. Operating without a commercial buffer compromises your personal privacy and risks missing crucial legal deadlines. Securing a registered agent is a non-negotiable step before filing any paperwork. With your structural strategy and registered agent secured, we move to tactical execution on the Alaska Division of Corporations, Business, and Professional Licensing portal. Step 1 is the LLC name availability search. You must verify that your desired business name is entirely distinguishable from any existing entities under Alaska law. Next, you file the Articles of Organization. This form establishes your company as a separate legal entity and requires a one-time state filing fee of $250. Filing this application online through the portal processes the payment and grants your LLC immediate legal recognition. Step 2 is filing the initial report. This document updates the state with your company's current management structure and contact information. The state does not charge a fee for the initial report, but it carries a strict deadline. It must be filed within 6 months of your formation date, or the state will impose administrative penalties and risk dissolving your LLC. Step 3 is acquiring the Alaska State Business License. Alaska requires almost every operating business to hold this statewide authorization. This license carries a $50 fee and is a distinct recurring requirement. It is completely separate from your LLC formation filing and must be renewed annually. Executing these 3 exact steps in sequence on the portal prevents costly administrative rejections and fully secures your legal operating status in Alaska. Once the state approves your entity, the focus shifts to establishing your federal and internal business infrastructure. You must acquire a Federal Employer Identification Number, or EIN. This acts as the social security number for your business and can be generated directly on the IRS website for free. Do not pay middlemen services to acquire this number. The federal application takes minutes to complete and issues your EIN instantly upon submission. Next, you draft an operating agreement. This applies to both single-member and multi-member LLCs, dictating exactly how the business is governed and how funds are managed. Alaska does not require you to file this document publicly. However, it serves as the definitive internal blueprint. If your business is ever sued, the operating agreement is the primary legal tool used to prove that your personal assets are fully separated from the company. The final infrastructural step is banking. Using your stamped Articles of Organization and your new EIN, you open a digital-first business checking account without ever visiting a physical branch in Alaska. Combining the operating agreement with a dedicated business bank account finalizes your corporate veil, mathematically enforcing the separation of personal capital from business liabilities. An active legal entity requires ongoing maintenance. The Alaska Corporate Shield relies on 2 specific recurring deadlines. First is the biennial report. This costs $100 and is due on January 2nd every 2 years, updating the state on your entity's active status. Second is the state business license renewal. This requires a $50 payment submitted annually to maintain your legal authorization to operate. This diagram illustrates the true cost-benefit ratio. On one side, you have $100 every 2 years and $50 annually in compliance fees. On the other side, you retain a double-digit percentage of your net profit that would otherwise be lost to state taxes. When these minor compliance fees are weighed against the massive volume of retained earnings, the friction of paperwork becomes a rounding error. This structure pays for itself once your cumulative state tax savings exceed the initial registration and agent fees, a threshold often reached within the first quarter of high-margin operations. Remote founders and digital entrepreneurs must stop defaulting to high-tax states. Implement these exact legal structures to scale your operation efficiently and keep the capital you generate. Rigorous, automated compliance is a negligible price to pay. In return, you secure a lifetime of 0 state personal income tax, 0 state sales tax, and a clear statutory separation between your personal life and your business liabilities.